We look at gold and you can see currently that yesterday and today we've had a bit of a bounce. Now we are currently at the 200-day moving average that is coming in at 1842. We are trading 1842. If you look at the first 23.6 fib, you can see that's coming in at 1838. If you look also at our stochastics and our RSI, you can see that we are beginning to tip up off of quite extreme oversold levels. Not on the RSI, but more on the stochastics. Now the 9-day moving average is at 1850. We know that's a good area because we can see all along here, and when you go back and you can see 48, 49, 51, all these little bases here will provide some resistance on the top side. The 55-day moving average is intersecting with the 38.2 fib that's coming in at 1862, with the 55-day moving average coming in at 1864. Again, that's going to be a good area where people will be taking profits on long positions and you could see some short selling. Now, I like gold. Not sure why at the minute, but I do like gold. And when you take a look at this weekly chart, you can see, from going back, that we've made a really good break to the top side. And this move here that we've got, come here, little thing, this move here and this move here is a bullish sign for gold. This is a bullish pattern, and the way you get a bullish pattern is with the flag, lower highs and lower lows. Now this pattern only comes after a big move, either, well, let's just talk about the top side because we're in an uptrend. So this particular pattern comes into play after a big run to the top side, and we've seen that. We've seen it go from here last year all the way up to over $2,000. We currently had the high 2074. Now what you do with this is you measure targets, because we don't have anywhere else to go from. Gold is at the moment is at 40-year, 50-year highs. So we have to do a measurement. And what you do is you measure this pole. So you take the top of that, which is at 2074. You take the base of it, okay, which is at 1451, and you subtract that, and it leaves you with the number of pips that you're going to get on the top side. Now that comes in at 624 points. Okay, so if we break this high here, and that comes in at 1959, what you do is you add to that. So you're adding on 624 points to 1959. That brings the target area to gold of 2,583. Yes, I know it's a long way off, but I'm doing this so that you've got an idea of where gold could go. Obviously, I'd like to do Bitcoin, but you can't trade it. This is why it's really important that you all look at longer term charts, because what you see in the longer term chart, you don't see here. This bit here was that continuation flag, but it doesn't show up on the daily, which is why I always look at the monthly, at the weekly, and at the daily chart every week, because it sets you up and you've got an idea of where gold is going to go. So as long as we don't break below here, which is 1764, remember we bought it down here, okay, we bought gold down at these lower levels, and we have been buying gold throughout last year. So as long as we don't take out that low, then we should be able to, in theory, reach that target area of 25. Where we gone? 2583. So just keep that in mind. Now, obviously, if you can trade options, proper options, then you could buy a call. But I would suggest that they are quite expensive because people have got the idea by looking at the longer term charts that gold is still buoyant. And it's a safe haven, gold. It's like the Swissy. It's a safe haven. Although you can't now buy physical gold, I mean, they are trying to stop you, governments are trying to stop you actually doing anything in these markets. But, you know, we're going to be one step ahead of them and we're going to do what we can. But gold, I think is a good longer term or medium term investment. So keep your eye on that 200-day moving average. It really is important. If we break it, yes, there's levels of resistance above it, but overall the picture is bullish, and overall we want to be buying any dips in gold. Obviously at that 2074 we're going to have a problem. You're going to have a problem here as well. So what you do is you have your core position or your core way that you want to be, the directional move in this. So in gold, you are buying dips, getting out of them on rallies, buying a break, blah de blah de blah. So that's what we're doing with gold, because eventually I want to see that 2,583 target. Okay, good luck. I will catch you all later.